Skandaprasad Seetharaman, the CFO of the company, with us on the show. Mr. Seetharaman, good having you. Thanks so much for taking the time out and being with us. If I try and slice and dice your quarterly performance, there are a few positives that come out this time around. More notably for me was the operating cash flow to EBITDA performance at the end of quarter four. And I'll get to that in a moment. Could you describe whether this performance on operational metrics and the bottom line and the revenue growth is something that you had penciled for, or is there some spillover that has happened into quarter one and quarter two?
Okay. Good morning to you, Neeraj, and good morning to all your viewers. Thank you for the opportunity. I think to start with, it's been a historic high year for us. Best ever top line annually and for the quarter four, best ever margins, best ever PAT, and best ever cash. We are sitting on, as you rightly said, a very strong set of operating cash flow is what we have been able to deliver, over 350 crores. And if you take it as a cash generation to PAT, it's about 1.2x of PAT is what we have generated as cash for the year. And we closed the year with a gross cash of 1,000 crores almost, and about 700 crores of net cash if you don't consider the HAM, which is only a transitory nature. So it's been a very strong set of numbers, something which we guided for and which we work in that direction for. Margins, top line, mix, whether it is India, overseas, municipal, industrial, EPC, O&M, all of these have been in the direction and in the lines of what we envisage and what we guided.
Okay, so I would presume that for most companies which are engaged in contracts with state governments or central governments, or mainly state governments as well, receivables are a problem. We're seeing that in the infra names for sure. How is it that your operating cash flow to EBITDA numbers have increased the way they have?
See, when we say municipal, it is really not us dealing with the state governments. We deal with projects which are backed by multilaterals or federal government guarantee or a sovereign backing. So we never depend on the state's exchequer for our payments. So that way we've been able to improve our quality of the order backlog significantly. And this is also reflecting very well in the receivables. If you see, we work on a net working capital days of somewhere around 109, 110 days, which is in the range that we also have been telling that with growth, this is the kind of range that you should expect, and we're very strong there. And the operating cash is a reflection of how we have been able to manage the quality of book as well as collection efficiency, and of course, the pace of execution and billing.
Okay, I'm tempted to ask this to you because it's such a good number, right? 79% in FY25, from 36% in FY24. It's a big jump. I'm kind of stuck with that. My question to you is this something that you can replicate now or improve upon going ahead, the operating cash flow to EBITDA?
I think we will obviously hope to keep the same pace as we go forward. Okay. There's nothing to indicate that we cannot be a continually operating cash flow generating company. You've already seen we have closed 5 consecutive years on a net cash position. This year with 700 crores, operating cash is 350 crores. If I'm not wrong, my free cash is also about 300, 350 crores. So it's a very strong performance. As we said last year, after all the changes in strategy, due to the strategy that we did, the last year was a base. And now with the medium-term outlook, we are looking at moving forward to a 50-20% CAGR, a 13-15% to 15% EBITDA, remaining net cash positive and delivering 15% and over ROE. So all of these will clearly indicate to you that we will continually envisage and work towards remaining net cash positive and cash flow generated.
This margin uptick, it happens as a result of more international projects, or is or a different kind of a change to the product mix?
I think broadly we will attribute it to 2 or 3 reasons. One is, of course, the higher international mix that we have been moving towards. The EP strategy that we took, where we defocused from construction, and a higher focus towards industrial. The EBITDA kicker, which will come out of O&M, you will see as the order book pans out. So that is still to come, and that is where we guided this 13 to 15%, and all of these will be stepping blocks. From a product perspective, already we are very well invested on desalination, reuse, wastewater treatment, and industrial treatment, and that will continue to remain our focus and occupy a majority of our order book as well as execution.
Got it. This focus on industrials to increase it to what, if I'm not wrong, 30%, right? I mean, why is that the case?
See, industrial, the projects are more, the appreciation for technology is better. They are shorter in terms of duration. They give you an opportunity to go for more EP versus EPC projects. So all these are significantly better drivers. And of course, you know, we deal with very, very highly rated companies across the world. Majority of our order book is for the oil and gas, where money is never a factor, execution is a factor, and we have a very strong execution attitude. And that is where there will be incremental margins. We'll be able to invest in technology, and also the cash flows are much, much better.
One final question, Mr. Seetharaman, and that is around order bookings, right? You want a higher share of book to bill. The order backlog looks okay right now. What is in store for FY26? Any large order wins in the annual, or would you do shorter duration, small ticket sized orders as a preference?
No, I think our smallest, I would say our averages have gone up, and we don't now generally take small ticket size. We are a big player. We are amongst the top 3 companies in the water sector globally. So our ticket sizes are significantly going up. You saw even in this year, we took an order which was almost $370 million along with our consortium partner. We have already given a preferred bidder status for about 3,000 crores of orders, which in the next couple of months will fructify. These are again a mix of medium size and large size ticket orders, and all the orders that we are looking at today. And our focus area is mainly Middle East and Africa, where the ticket sizes are much bigger than India. So our ticket sizes will go up as we move forward. We will look for larger, more technically complex and marquee projects with marquee customers.
Okay. Well, we'll leave it at that, Mr. Seetharaman. Thank you so much for taking the time out and being with us. Really appreciate your time. All the best for the quarters ahead.